Good morning, ladies and gentlemen, and welcome to this live trading webinar. Good morning, Ruben. Good morning, Larry. Maria said, good morning, all. Good morning, Maria. Margaret, good morning from Margaret. Mr. Nick said, hello, everyone. SY said, good morning, Theo. Good morning, Mladen, of course, on this webinar. Yes, good morning. Radolf said, good morning from Netherlands. Hope you're doing well. Radolf Janice said, good morning, everyone. Ebrahim, good morning, Theo. Good morning, everyone. And of course, Mogiol said, good morning, Theo, and good morning, everyone. Good morning, guys. I hope you're doing really good. So let's start it. This webinar is for general information only and is not intended to provide trading or investment advice or personal recommendations. And please refer to the analytics section at admiralmarkets.com. You'll find the weekly trading podcast and you can listen using any of the available options. Also, if you click here on the education, you can see all the available webinars. And today, as you already know, the Market Talk series will host Sunil, an exceptional trader. I call him the master of Fibonacci trading. So please make sure you come on this webinar. I will share the link as well. Yes, of course. Let me bring this screen. Just 1 second, guys. This one here. So if you go to admiralmarkets.com, education, you click on webinars. And here is the Market Talks, Sunil Mangwali. Also, remember, I host the investing series webinar as well as the psychology webinars. Please click on both and register so you learn as much as possible. Now, for this one, I'll copy and paste the link. So let's start with the pound against the US dollar. Also, I see many people, they join us. Binyam, good morning. My friend said good morning, but I can't read that letters. I hope you help me address your name based on English letters. Mr. Carlos, good morning, guys, said from Mr. Carlos. Ude said good morning. Good morning, Mohamed. Mohammed said good morning. Good morning, Mohammed. Niklas, good morning, everyone. Poncho said good morning, everyone. Roomman, hi, Theo, guys. Have a nice Thursday. Fantastic. Roland, how are you doing, Roland? Good morning. That's why I said Theo Gold, it's on the 4-hour chart in a channel and broke above now. How do we interpret that? Because it looks like a support zone now. Question mark. We will check the gold. So let's start with the pound. Yesterday, at the during the New York session, we saw a strong dump on the US dollar and other currency pairs against the US dollar. They got appreciated. Bullishness, that's a daily chart. The moves happen around 5 p.m. broker time or 3. Yes, started from 3 o'clock. So again, what traders they see is that price is bullish. Price is bullish, but where overall direction is. Remember, I told you many times, for any price to move downward, first it has to move upwards. And that's why trends existed. For any price to move in a predominant upward direction, it has to move downwards first. So in this particular one, traders, they see that, okay, bullish engulfing, support, bullish candle, and that's right. Nothing wrong with that. That's what we see. Everyone sees that buyers are in control. But overall, the medium-term market structure, it's in a downtrend. So at this point here, there are strong resistance areas, and there is a confluence of resistance. So how do we interpret that? First, we must acknowledge this, and we have to accept it. And we are not running after the move like, oh my God, I missed this opportunity here, especially for those who have your charts like this, very zoom in, and you miss the opportunity to understand that overall this market was in an uptrend and it broke. Maybe it could develop a kind of complex head and shoulder reversal pattern here, but at the time being, there are some indications showing that there is a resistance, horizontal resistance, and also a downward trend line resistance that can act as resistance. So we need some clarity, and at this moment we don't have a clarity here. Now, if traders want to trade and buy the pound and they're going to experience winning trade, they're going to say, okay, I knew that will happen. On the other side, if traders, they start saying, I'm not going to do anything, and because I heard that guy on the webinar saying this stuff, and if the price push upwards, oh my God, why did I listen to that guy? Other scenario, if traders, they sell, yeah, I knew that that's a downtrend and I sold, and yes, a winning trade. So the bottom line is that when the picture is not clear, any way an outcome will occur, anything can happen anyway. So we must understand the structure of the market and decide what we're going to do and be okay with our decisions. Now, we have to be okay with our decisions if our decision is based on some rules. If our decision is based on how do I feel today, I don't think so. It's a good way to approach trading. So for this one, I'm on the sidelines unless I see a lower time frame reversal price action or reversal pattern if we are talking about 5 minutes, 15-minute chart. But on a higher time frames, a reversal price action, it's more than enough to indicate that there is some selling pressure can force the market to continue to the downside. Next one, euro against the US dollar. In this particular market, price broke outside of this downward trend line, and we need two closes above this trend line to validate this breakout. But again, there is a disagreement between the euro, the pound, the Aussie, the Kiwi against the US dollar, and it's gonna keep being that disagreement until this Friday, when the non-farm payroll numbers announced. So for now, I won't be looking to do anything with the euro against the US dollar. Weakness appeared on the Australian dollar as well as the Kiwi, as we want to see shortly. Australian dollar tried to break above this this recent swing. Now, there is a bit of conflict here. It's an obvious resistance, but the market traded well above this one and forced break this resistance. So in this case, and again, it's hard to draw on this MetaTrader to use, like, we need to use this kind of resistance here, okay, the most recent one. And we see that the price false break didn't manage to break above and maintain its buying pressure above this resistance the last two trading periods, particularly on the daily charts. So we might see some push to the downside on the 4-hour chart, because the structure on the daily chart is clear. There is a clear resistance on the 4-hour chart, multiple attempts by the buyers, they got rejected, and maybe we see continuation. Now, if in the next 4 hours, sellers, they don't take control of this after they create this rejection, it looks like that the market is not decisive anymore in which direction it wants to go. Like you see this one here. So buyers, resistance, sellers appeared, and the next 4-hour candle, the next 4 hour, the one after, they just pushed the price until they found this support. So pretty bearish on this one. Also on the Kiwi against the US dollar, weakness on the Kiwi, as we can see from this chart, multiple resistance levels here, and price yesterday got rejected. So it looks like some sellers want to be in control. Now, after we identified some, this is a clear market, in my opinion, that's a clear market to trade for intraday. Why? Because there is a structure we identified. Here it's a downtrend. No major trend lines or horizontal resistance broken. And at a crucial level of resistance on the daily chart, the market got rejected. So probability is to see today's move to the downside. High probability. Let's check the 4-hour chart or the 1-hour chart. Don't see anything here. USD JPY, bearish engulfing yesterday. What did we say yesterday? We said that the market is in an uptrend. It doesn't have any clear any signs that this is in a downtrend. Again, someone who has some trading experience very, very well will ask me, so Theo, how can we trade reversals if we don't sell from resistance during an uptrend? And that's very good point. That's an important question, and it's worth some answers around that. Because if you are trading for a while, you identified, like we took this trade here months ago in June. Remember, we identified that it was a strong resistance on the daily chart, on the higher time frame, on the weekly chart. Came on the daily chart, we took the trade 3-2-1, somewhere like there, we got out of the trade. Okay, other people, they got out of the trade at this point. Now, we must understand that there are some key factors, key fundamentals to take in consideration when we do our analysis. Like this one here, it was a strong weekly area resistance, and the market, after we see, actually we place some sell stop orders somewhere there, and the market, and after it broke this area, the next candle showed that, hey, I'm here to sell, I'm here to sell, I'm here to sell, I'm here to sell, I'm here to sell. Okay, but in this particular point right now, we don't have any kind of negative divergences, and we don't see a strong level of resistance. That's the point. If that was a very strong level of resistance and the market moved in a straight upward direction, not in a zigzag move, because this move now indicates that the market is moving sideways. It's not in an uptrend. This is a consolidation pattern that can end up in two ways. First, if it's break and closes above for 2 days in a row, consider this a valid breakout. Therefore, we will be looking to buy it. If breaks below this consolidation, consider it as a sell signal and we're going to trade it. But within this narrow consolidation, that's where the problem is. In this market here, and guys, please understand this. In this market here, it's been 2 weeks, the price shows sideways move, and there is no risk management rules to trade high probability trades at this moment. The only way to trade this market and have high probabilities and high chances for success, for winning trades, is if you use the resistance and the support and you go to the lower time frames to find some entries from this resistance to the support. That's the way this market could be traded. All right. Because the risk reward in this particular time frame is not favorable. USD Canadian dollar bearish engulfing yesterday continued, not that strong though, but it shows that sellers are keen in this market. So myself, as there, we identify the pattern, yes, and it might be continued downwards. The risk reward is just up to 2-1. So there are multiple ways to play this trade. Either we take a position on the daily chart with entry stop losses according to our rules, and we can target 2-1 minimum, 3-1, and we make sure that when we go for that 2-1 or 3-1, there is room for the price to move in that direction. Often I see traders, what do? They place, okay, this is a bearish engulfing, I sell here, I put a stop loss above there, so entry, stop loss, and take profit here. Nothing wrong with that, absolutely amazing. How many pips? Let's round it up, 100 pips to make 100 pips stop loss to make 1.5 to 1, because it is 150, 160 pips, and to make 3-1. This is 4.5 to 1. This trade to play it right here, but the market, to make it all the way here, it has to move beyond this strong support, this strong support, this strong area and zone of support. It has to penetrate and move beyond that. Who guarantees us that this will happen if we are not the market makers? Nobody. So what do? We do understand the room of opportunity for the retail trader. We have to understand that for now, based on this information we see, the room for opportunity is up to here for now. There is an obstacle if you are trading 5-minute chart or 15-minute chart or 30-minute chart, 1 minute, 1 hour chart, any other time frame beside the daily chart. You have to understand that here there is another obstacle. But if you trade the daily chart, you have the room for error in this particular market structure, because if you enter here and your stop loss is above there, if the market bounced upwards from this support, that's inside support and very strong support, and move, let's say, 50 pips, 30, 40, 60 pips, and then it continued moving downwards, so maybe from here to there, it will bounce upwards, it will retest the 61.8 fib retracement, and it's going to continue downwards. In this particular time frame, you do have the privilege of room for correction. But if you are trading this market entering from here and having a stop loss of 20 pips and moving your stop loss on the lower time frames, I mean, these kind of strategies, that they are very valid, but you don't understand that here it's a support and you have take it in consideration and you have only 20 pips stop loss, you're going to see the market maybe take your stop loss and continue downwards, and you're going to blame the market. You're going to say, oh my God, the broker hands me, the market hands me, everyone hands me, I just want to run and hide. But that's not the case, because you missed to read the market. You read the market, and the reason I spend this time and I explain them so detailed to you, instead of going through 1 million markets and just play the smart guy here, I want you to understand. I want you to become skillful traders. It's not like a joke webinar. It's like, it's important, it's serious. You are there, you invest your time, you fund your accounts with your earned money, and I want to help you to become the trader you want to become. Okay, so that's the bias for this USD Canadian dollar. USD CHF bearish engulfing yesterday, and this is bearish engulfing. Multiple support, you can see there is multiple support here, so maybe the market will fluctuate until Friday if it's going to continue downwards or it's going to push upwards. That's not that clear. Euro JPY, I was looking since Monday, I was looking for a potential bearish engulfing, placing orders. None of them got triggered, and the market broke to the upside. So we need 2 days for a valid, 2 days to close upwards for a valid break. Pound JPY, the same. Weakness on the JPY, as we can see across all the markets, strength from the other currency pairs. A reversal price action on the Canadian dollar against the JPY can be used to some shorts, and a reversal pattern maybe on the 5-15 minute chart. Intraday traders, mark this in your chart. Price comes up to the resistance. Maybe we're going to see some lower highs and lower lows. We don't hesitate. We take the opportunity on the 5-minute chart or 15-minute chart, and we just call it. I mean, we don't need to sell it and wait the price to come here. Like you sell it from there and then you sell it from there and again and again. No, we identify the market structure. We take the opportunity. And if we make 2 or 3 to 1, that's fantastic. We move to the next one. Let's check the gold. Yes, obviously we can draw a channel on the 4-hour chart. It's going to be much more obvious and a very, very accurate channel. I like this. Although I haven't scrolled to the 4-hour chart, so I didn't spot it. So that's more accurate. So I don't see the channel broke to the downside, or if you're talking about this resistance, yes, it broke. Now we are at the channel line. That's how we call the opposite line to the trend line, and yeah, we may see some correction, but yeah, that's a very strong area of support, confluence between an upward trend line and a horizontal support, and maybe a FIP retracement number. WTI daily chart, pretty much nothing here, not a tradable pattern. Reversal candlestick at resistance from the daily chart can be used on a lower time frames for some shorts, but the spread is so wide on the silver, so I prefer to avoid intraday on the silver. If there is a correlation, there are times silver And this gold give correlation. So maybe instead of intraday silver, we can trade intraday the gold. Okay, that's a way to perceive the market. Okay, yes, why? Darshan said, good morning, Theo. Why is USD JPY still struggling to resume the uptrend? Because yesterday, very good question, Darshan, because yesterday, traders and investors, they dumped the US dollar after the ADP announcement, because it shows lower number expectation. It came lower than the expectation, so they dumped the US dollar. Now I'm thinking what had happened on Friday, tomorrow, with the non-farm payrolls, right? Usually we see that when they show a non-farm, when they show ADP, thanks to Ruben, 3 minutes to open, usually the non-farm payrolls, they come the opposite, or at least the US dollar takes the opposite direction. Cryptos Arena Joshua said, good morning, my friend. Janice said, Theo, could you explain please how you understand engulfing? If you use the whole candle with the wick or only body of the candle, what is the more significant? The whole candle. Janice, simple as that, the whole candle. Neira said, I assume you said good morning. Railway said, numbers are growing, Theo. People are starting to notice you. Thank you so much, Railway. I do my best to add the most of the value in these webinars for you guys. So looks like you appreciate it, and other people who watch it who are skeptical to join these webinars, they start appreciating, and that's all. That's great. Ibrahim said, thank you, Theo. That's why you in global demand guides. Carlos, hi, Theo. I can't find Bitcoin in my platform. No. Are you using Admirals platform? By the way, guys, you can open, if you don't have account with Admirals or any account, you can open account with us, even a demo account, try and play around, and then you can fund your account if you find that this appropriate for you. So now Mogil, he will say non-financial advice. Okay, so 2 minutes for the London Open. Let's see, 5-minute chart. Very choppy here. My goodness. Non-farm payrolls. Remember, guys, we experience again these situations with the non-farm payrolls. Last month, the week, from Monday until the non-farm payrolls, the market was so weird, and we expected that to happen. So a buy stop above here, a sell stop below there. That's the range I'm looking for, the breakout, if that will help you. So there is a range that at the London Open, market will either break to the upside or we break to the downside, and it's going to move aggressively at least for 10 to 15 points. And that's what I'm looking to capture every single day with this strategy. Nira said, please teach me advanced trading, which 2% of people knows. Please, I know all basics of trading. Please pay attention to these webinars, and when there is something important that I tell you, guys, please pay attention to this stuff. Make sure you accept the information. Guys, we already placed the trade. Okay, we're going to wait for either the buy stop order or the sell stop order to get triggered. And I would like to comment on what Nira said here, because it's very important, and it's something that traders think that there is something mystical in trading, and something that we hide it. And the matter of fact is that there is nothing mystical. It's just it takes time to really accept in real time the nature of trading. Okay, there are, like the example I show with the pound. Okay, by the way, we got triggered in this buy stop order. So price make it just a little bit below the 10 points. Now it's came back to the range. It was just below the 10 points. And let's see if we're going to make it higher. If it's going to go above here and trade slightly beyond, I will close the trade and I will call it for the day. But if it's going to come below there, again, I will close the trade with a loss, and that's okay. So like the example I explained, not with the pound, with the USD JPY. We identify the market structure, we identify the bearish engulfing, but that bearish engulfing printed on within an uptrend. That's a weak trading signal. So why to take it? But again, traders, they have that tendency, because we are humans, and I include myself as well while I start trading, and we want to take that trade. Why? Because we think that's the only opportunity out there. But that's not the case. That's not the reality, because the markets are dynamic. The markets constantly changes minute by minute, second by second, and another opportunity will be on the horizon. So there is some kind of mental structure we have to develop, as well as technical structure, to understand what are we doing here and why we are doing it here. And I believe, I honestly and firmly believe that you are extremely lucky that you have the privilege of time to participate in these webinars, because from heart, I give you the knowledge and the experience I gained all these years. And I'm sure, because I receive emails with people, and they say, thank you, and now I start doing this and that and that. And guys, you have everything for free here. Okay, so appreciate it. I know you appreciate, keep appreciating it. And I'm sure that at some point you're going to develop the skills you want to develop. You're going to become the trader you want to be. Okay. So we are still in this trade. I'd like to check the other platform here, the trading view, I mean. Is anyone trading something else? Do you guys watch any other currency pairs or indices, something? Pen and book is very important asset during Theo's webinar. Ibrahim. Yeah, Florin, Nasdaq, Dow Jones, and S&P 500. Let's start with the Dow Jones. Long-term analysis, weekly chart. Market is okay. Market is theoretically in this uptrend, because it still maintains the structure of higher highs and higher lows. Price didn't break below this low to indicate that a new market structure is there. Daily chart looks like the opposite, but again, because it's the correction of the weekly chart, so we do expect to see some continuation upward, and I will see strongly resistant up to this point here. So I'm more on the buy side than on the sell side in this Dow Jones, as well as the Nasdaq. So yesterday it was a break above, but if today the price already made a new high, So if the price doesn't take the yesterday's candle's low and form a bearish engulfing candle, this means that buyers are still in control and they would like to continue the price to the upside. S&P 500, this is more clear than the rest because, as you guys see here, lower lows, lower highs, and then price clearly make a new high. This we call it in technical analysis a non-failure swing because the market didn't make the new low. And it created a new high, so higher highs, higher lows. I think I have to close the trade on the DAX because the price traded below this one here. Let's clean the charts a little bit. So that one was, for me, it was a false break, a false breakout. So I'm out of the trade. There are traders on this webinar that they put this buy stop and they put only 10 pips, 10 points for a stop loss. That's totally fine. I played it a little bit different. Nothing wrong. The way you perceive the risk and you manage your positions, it's absolutely based on your opinion, okay? And that's totally fine. Macquarie sold pound US dollar on the 5-minute chart. Let's go quickly to check that. You sold the US dollar on the 5-minute chart when on this bearish engulfing or right here. On the 5-minute chart, it shows lower highs and lower lows. Maria, Ibrahim, soon. Thank you, Theo. Look at the strong single 5-minute chart on the USD JPY. Yes, strong bearish engulfing here. That's the 5-minute chart of the USD JPY. Hopefully soon, guys, we will launch officially the MetaTrader, the trading view, and we're going to have the privilege to flip between the charts much easier in the time frames. So I've been informed that in the next couple of months we should be fine. And if Ruben is here, oh my God, he will tell. Ruben will say, Theo, you said that 2 months ago and 1 year ago in the next couple of months. No, I think these next couple of months. Okay, so guys, I have to end this webinar. Thank you everyone for your participation. I hope you gain a lot of value, and really, if you have time tonight, I'll be looking forward to see you on the market talks. Otherwise, I will see you, and I will see you also tomorrow at the same time for the same webinar. In the meantime, happy trading. Remember, markets, they're going to play sideways a lot. Starting from Monday, they are playing sideways due to the anticipation of the non-farm payroll tomorrow. So please keep that in mind while trading. And yeah, good luck. Thank you. Bye-bye.